Okay. And are we live? The question is. Okay, we've got one guy, Ocean Blue. I can see us on YouTube, so hopefully everybody else will be able to see us too. All right. Hi, everyone. So obviously this is the first time I'm using another streaming software because I want to have a little bit more control over what you guys can see, and we want to share screens and stuff. So can anybody tell me whether you guys can see us, hear us, and all of that good stuff? I think they can see us.
It says everyone can see and hear you.
Yeah.
If we trust the software, that's what it says.
Okay. Somebody says, "What's poppin' slimes?" Lovely. See and hear. Okay, good. Yay.
Are you slimes?
Yeah.
Is that an endearing term?
Not that I know of. It's a new one. They called me a wicked witch at one point in one of the prop trading. Yeah, because I have the supply and demand levels, so it kind of looks like I'm some kind of a mystical creature who can pick levels. But as you know, it's nothing. It's just like statistical advantages. It's not magic.
I shorted 107.41 because I'm a champion. Come on down.
Yeah.
Anyway,
nice. Shout out
if
from
you're mean
Dallas.
to D,
okay,
if you're mean to D, I'm gonna eat oatmeal and crunch in your ear. So that's gonna be your penalty.
That's very healthy. Yeah, I'm just on the Red Bull today. Yeah.
Oh,
very healthy.
I can't do that stuff. I can't do that stuff. It interacts with all my other drugs.
Yeah, with all of the other drugs. Yeah, it's always a problem, isn't it? Yeah, I don't do that much caffeine, but today I've had a really, really long day. And plus, if you guys saw me on my Instagram yesterday, I managed to give myself a black eye. Now I'm wearing quite a bit of makeup to try and cover it up. But what happened was I got up really early in the morning and I tried to get all the puppies out of their crates. And I forgot that it was like dark and I didn't put any lights on. So I forgot that I already opened one of the top crates and I went full speed, smashing my eye into the edge of the crate. So, and then, yeah, it's very pleasant. So now I have this like nice black eye happening. I did my best to cover it, but I think you can still see it. It's not pretty at all. So yay for me being all clumsy. Moral of the story, like I said on that.
Your lighting and your makeup is leaving mine to shame. So
yeah, I have to give you the ring light because I use it as my main light. It's amazing. It's got this like awesome creamy color, and it's only one company that does it. So I'll hook you up.
Yeah, I have one here that but it's right in front of the webcam. Like, so if I go like this, I turn it off, you'll see that.
Yeah,
and then
it is better.
I have this, like, I go like that or that.
Yeah, the warm light. I like
that one's better. I like that one. I'm going with that one.
Yeah, I think that's tungsten lighting. Yeah.
Yeah, I've been to the beach. There we go.
Yeah, nice and tan. Yeah. All right. So guys, we're going to be doing a little bit of screen sharing and talking about prop trading challenges and how to pass them, how to stop pressing the reset button. You like to say pressing like a reset like a drunk monkey, which is like a very good way. Very
dopamine.
Good way. Yes,
I need another account.
More.
More demo dollars.
Yeah, exactly. So we don't want to be doing that. We want to not trade from the ignorance side of things. We want to make some intelligence decisions based on probabilities. And you have Rod and me. We've done like loads of observation of the markets, and we've both been involved in mechanical trading algorithms. So we know some stuff. Let's just say we've been at this for a while. All right. So we've got some people here. Fort Worth. I don't know where that is because I'm not American.
That's in Texas.
Texas, right?
That's the great state of Texas. Yes, Dallas, Fort Worth.
Yeah, right. Okay, so we got somebody in Rockwall.
Yeah.
Right, Texas. Yeah, saying. Yeah, all right. Ricardo, anyone else waiting on bearish price action for CL? Please do not try to short this. This is a result of European Union deciding to put a ban on Russian oil. Now, that means that the world is, or the Europe is going to lose about like 6 or 7% of its demand, oil demand. That's not a good thing, which is why it's all gone a little bit crazy. So I wouldn't really try to go against this unless you get, you know, consolidation. But having said that, we only have an hour before the settlement prices are announced, so it's getting a little bit late. I wouldn't mess with that today. If you didn't catch a good portion of this move, the breakout, I just leave it for today. Just because something has gone up and up and up, you need to, with crude oil especially, it's got that fundamental side. So let me just share my screen quickly. So you have this, obviously you have statistical ranges, which might be reactive as well. However, if we go back, you will see that the average session range was already done. And yes, there's an average daily range, but the reason behind this move is the fact that you know, we're having problems with one part of the world supply. So just don't really play around with that. Crude oil tends to have certain moves that very much align with the fundamentals. And it's not the case every day. On most days, it would be quite technical. But on some days, especially when you have semi-apocalyptic times kind of staring at us, I wouldn't go against that. But that's just me. You know, I mean, if you really want to test the levels to see how they work under pressure, you can try short it, but just don't hold it for too long, and don't hold, you know, high expectations for this move holding. You know, if you're going short, today is, for me, it wouldn't be the day to go short. Let's just put it that way. So yeah. Okay, so okay, Rhode Island, USA. Oh, I've got a friend there, very, very good friend actually. Nice. So it looks like we have a lot of USA guys in here. All right, so what else was I trading today? Yeah, I was looking at gold. Now, gold, interestingly, did not really do much of an overreaction. It was pretty much contained to basically the same 182 ticks that we had pretty much in the first hour and a half of the session. Now for me, you know, gold, if you're going to short anything, gold would probably be a better choice, because this level here seems to have contained the price for now. And gold has to be a late mover as well. So if you're looking for an intraday reversal, I would be looking to short gold at this time of day over crude oil. So that's just my take on it. Rod, what do you reckon? Do you want to share your screen?
Yeah, I can. It looks like this primary one over here is unfortunately a little-ish frozen, but why don't you, is it sharing now?
Yeah, it's sharing. We can see it. Yeah.
Cool. So it looks like we could talk in the chat too. We call these brick wicks. They're modified Rankos. Give me a one in the chat if you've ever seen these. They're not standard Rankos. They've been around for a while in futures trading, so it'll help me calibrate. They look better than what you're seeing there on the screen. It looks a little distorted, but I don't know if there's any chats coming through. Oh, do I have to go to the bottom?
So hold on. Let's see.
Okay, well, either way, someone's asking if I'm a scalper or a swing trader, and the answer is I'm both. So what I talk about with people that are part of the TDG group is ultimately you're doing two things. You're learning how to trade a strategy, follow the rules, understand that, but you're really learning how to be a trader. That's the key. So I call it situational fluency. So the chart that you're looking at now is meant for shorter term trading. I don't refer to it as scalping. I just refer to it as tighter target trading, where if I get quick moves, I will take them. And then the range trader, which is over here. Let me see if I can bring this over, this whole chart over. Let's see if it'll all come over. This is a virtual private machine. Yeah. So right here, you can see the range trader, which is more similar to what D uses, which is a volume profile and like 30-minute candles or other candles. But most of the time, I will enter off of levels, ranges, zones, whatever you want to call them, and then I will manage them for tighter targets and trade around them. I call it campaigning using these modified Renkos, which, like Renkos in general, they'll tend, and Hakanashi, they'll tend to show you trends a little bit more clearly. So today I'm just basically short the NASDAQ, pretty standard stuff. This whole shaded area that you can see here, let me just make sure it's kind of, my cursor's working. This whole shaded area that you can see here from this blue line all the way down to, let me move this over a little bit so it's away. So the ultimate target, I'm leaving there at 975, but the ultimate target could be all the way down at what we would call the bottom of the bid zone. And what you're looking at here is 2 standard deviations. This is 1 standard deviation here at 14,113. And down here is 2 standard deviations at 917. This whole thing would be called the bid zone. So what's interesting is the majority of the time I would be buying here in the bid zone. But I have this one last little runner that I'm campaigning around to see if we can drive it down there to get filled at 975. I'm not looking for the bottom of the bid zone. So
okay, nice, good stuff. Good stuff.
That's what I'm up to today. Yeah.
Yeah. I mean, I can see that from my side of things. So let me do this. On NASDAQ, I've got full contract NASDAQ here. The average session range is finished for the day. So combining the two approaches, I would say for me, because we're coming up to that kind of last hour of hour and a half of trading. And for me, that's the time of day when I noticed equities turning around a lot. And back when I worked for an equities desk, that would be my time of day when I would be typically entering new equities trades. So yeah, and this is kind of like one of the market stalker setups if you want. So we'll see whether we get another runner. The fact that there's bullish engulfing here around the average session low has not really had a follow through, and you had a supply that was reactive. So we smashed into the first available supply and carried on down. That's not a great sign. So just purely looking at it from where the moves have come from and how the price has reacted around them, there might be some further downside. But like I said, for me, the average session range is done for the day, and I will be looking for a trade in the other direction. So.
I absolutely agree. So just so you, I trade essentially micros, even in very large accounts. I'll build positions. Yes, the commissions are more. I understand that, but I try to stay aligned with what I'm teaching and training, which is showing people how to get through these evaluation programs, which require you to trade with a lot less risk. So I totally agree with D. If you're not in a position, don't sell or short into the hole. Right? I'm looking for just a few more ticks out of this. And I may add to the short if we stay inside the bid zone. But the move has happened. The other thing is a little interesting because we're on a Thursday, but we have a market holiday tomorrow, total market holiday, right? Not even really any futures trading is going to take place. So, so because of that, I think this is kind of a little weird. It's a 3-day weekend and that kind of stuff. So, and we've also had a pretty random day overall. We had the Dow just shoot up higher today and remain strong. So we got some divergence between the indices. And then the final thing to keep in mind is the NASDAQ is certainly being affected today by rates popping, and these the ZN and the ZB, which I know that D doesn't look at or trade very often. They're on their ass today. So they're frying some toads in the interest rate markets right now.
Yeah, not surprised. Yeah, every time there's any kind of monetary policy changes, the bonds just tend to go crazy. That would be the only time that I would be kind of looking at them. But again, it's the rest of the time. The weight just kills me. So I typically stay away from them. Mike D wants to know: is there any way we can put average session ranges on Ninja? I don't know. Like, that's actually one of my proprietary concepts. And one of the reasons why we kind of tell people just go to MetaTrader 5 because it's free, and the only cost you would have would be the Blahtech DR, which is what the tool is that I'm using. So let me just do that. So basically, let me just clean it up and remove some of the other things that's on there so you can see it. So basically, these measures that are blue So I'm not sure whether, I think you can see that pretty well. Yeah, so the blue lines represent the average session range. And if I show you how we've managed to create that, these are the beta versions, so they'll be called slightly different, but the parameters will be the same. So basically, I'm using previous 10 days, but it's not the entire 24 hours. It's literally just the session hours, which are controlled by these session schedules. So those are your session times, effectively. And because NASDAQ trades from, this is like in GMT, so NYSE opens up at 2:30 p.m. London time, which is why you see the session starts so late. And I use MetaTrader 5 mainly for charting. I mean, I do have an account with AMP actually as well, but most of the traders that come to us, if you already have a live account elsewhere, you're going through a prop trading challenge, what you can do is you can just go to MetaTrader 5 AMP Futures and effectively just get the Blahtech indicators if that's what you want. So it's, this indicator is actually not that expensive. I think it's about $50 or something, and that's like a one-off charge. So if you want to have session ranges, yes, it's like another platform, but it's actually a really, really good measure to have. And unfortunately, I haven't actually seen average session ranges anywhere else. It's something that I came up with. So I'm not sure that you can actually do that on Ninja. And we've kind of stayed away from Ninja because they refuse to go to a newer version of C#. They literally stayed in the dark ages, and now they've bought TraderRate, so that was their solution. And because of that, we weren't able to implement all of our technologies that we have, and we've worked very hard to innovate in these like trading tools. But yeah, so there's a couple of ways that you can do the average session ranges manually, which is a pain, I know, but you can get them into Excel sheet. So you get the time series data, export it into Excel, pick the 30-minute periods just from the period that you want to have, and then the next day just plot them manually on the chart. That's how I used to do it before I had Blahtech and everything that I have today. And it used to annoy me a lot because it wasted a lot of my time, which is why we have these. But yeah, and then it's one thing to note is that it's a dynamic measure. So I see a lot of people who are kind of calculating both the average daily ranges and the session ranges just from like the market open. But it's actually a dynamic measure. So every time the market makes a new session high and new session low intraday, in real time, you have to recalculate where your average session range high and average session low is going to be. So if I go back, we actually have this pretty cool feature that basically shows you the backtest mode. I mean, all of the levels on our indicators do this. So if we go back, you can see them moving. Okay, so it's not a static measure. So if you see these lines, they are moving. Yeah. So every time you make a new lower low, it changes, and then the session changes, and then it carries on. So just make sure you understand that part. So it's not a static measure; it's a dynamic measure. All right, more questions. More questions. How many sessions is it averaging? It averages 10 previous days. So session yesterday, the previous day, and so on for the 10 sessions. We found that the 10 days is kind of like a pretty good average to capture any kind of changes in volatility, pretty quickly. If whenever I use like 14 or 20 days, I found that it was too slow to realize that there was a change in the overall volatility. So it would like be lagging. So yeah, I use 10. We've got another one. So here we go. That's a good question. What is your recommended approach for handling top steps best day below 40% of total profits made consistently? Rod, you want to take over?
Yeah, I can answer that for sure. So I actually just did a video that I posted to my YouTube channel around. I touched on this quite a bit. It was like 5 tips to keep you from getting your face bashed.
I watched that today.
Yeah, and the one that I really emphasize is just understanding the actual account size, the true account size that you're trading in any of these prop programs. So, for instance, at let's take a $50,000 combine at Top Step. It's not 50,000. It has nothing to do with the notional value, right? At the biggest it is the day trader margin times the amount of contracts they actually let you trade. which I believe is 5 contracts in the 50,000. And unfortunately, Top Step has not made the transition that every other online prop firm has made. And Dee, hopefully we can mention what's going to be happening with Apex tomorrow. But you know, so it's 5 minis or 5 micros, which is asinine, right? It should be 50 micros, but they don't allow you that flexibility. So essentially, the easiest way to not worry about any of the rules, to be honest with you, including the consistency rule, which is not a bad thing to happen. If you're having trouble with that consistency rule, it means you're trading too big and you're just having some outside days where you get lucky trading too big. And that is the truth. It's you're putting on a few minis and you get a nice run and then you have a big day and it's going to screw you up. If you want to stay away from that and earn to trade, and many others also have consistency rules, size down, trade the micros. And I know this might sound crazy, like how in the world could I get through 2 $50,000 combine evaluations where I have to make 6,000 in profit if I'm only trading max 5 micros? You can. I do it all the time. I demonstrated. I just did it again for my team. And by the way, I have a funded Top Step account that I haven't traded in 9.5 months, and they won't even let you qualify for more than 1. So I'm doing this for the benefit of showing that you can trade 2 to 3 to 5 micros in those programs, stay very small. I prefer the S&P, the MES, and the NYM versus the NASDAQ or something else. And if you take that approach, I assure you, your biggest day will not be a problem. So
there are
other ways to do it, but it's always about, you know, gaming the system by just cutting off a winning trade because you're trying to trade in a way that's totally abnormal, that's created by these silly rules that they have for you.
Yeah, I mean, one way to also approach it is because I said it in my Earn to Trade review, because they have the 30% consistency rule. They're basically just setting you a daily target. That's all it is. So whatever your target is, if it's like, what, 6,000, so 40% of that is 2.4K. So try to never have a day that goes that far. But again, if you're trading small, that's never going to be a problem because your best days are probably going to be more like maybe $600-700. It's, you know, you're not going to be, and that's if you trade quite a lot, you know.
Correct. If everything's aligned and you had a full position on, what we shoot for is we manage risk to the day and we look for weekly gains. So we're targeting $800 weeks and $50,000 combines, $800 weeks. So at $800 weeks, you can pass in a month the first part of a $50,000 because the profit objective is 3. And then we cut our risk to 1/3 of the available risk on a daily basis. So if they let you risk 1,000, don't even get anywhere close to that. You can only risk 300. And that's an important concept of trading smaller.
I also say that to people. Never. Sorry, I'm talking over you.
No, I just want to make sure that people understand if you're going to trade small, you have to be consistent because your wins will be less, but your losses should be less, and you can't let that get out of alignment.
I think the key thing to take away from all this is that you will take time to reach the target. What I see over and over, and I actually have a video coming out tomorrow about this, is people rushing through their prop trading challenges. Why? I don't know, because you know what, you don't want to pay another $200 or $300, yet you know, you have a lot of people who have already blown like 10K, 20K, 30K. So now what? Extra $200 for another month of trading or another couple of months? What? That's suddenly a big problem. So for me, that's like a false economy point of view. So, you know, if you set your profits, you know, you screw your head on the right way. Don't try to reach the profit target in the minimum amount of trading days. Just because there's a minimum amount of trading days, that doesn't mean that you should be aiming to go for that target in that time span. So relax, enjoy the process. It is a learning experience as well for many people. So instead of trying to go like, you know, oh my God, target, try to relax and try to just go, okay, I'm going to focus on levels. I'm going to focus on good trading habits and good trading practices. I'm going to trade small, and it's going to be a test of your skill, but it's also going to make you grow as a person and as a trader as well. You're going to learn so much stuff about yourself by doing that.
Yep. I'm trailing down this little piece there on the NASDAQ. So I have a buy stop at 966. And we'll see if but I'm just trailing it down. So NASDAQ continuing to decline here, down 259. So it's trailing that down.
Yeah, nice. Okay, it's made a new low, so it's going.
Yeah.
Right. So somebody wants to know something to do with another concept of mine called Q points. So let me just show that. So when setting Q points, how far? God, I can't even speak today. How far back will you look to set the highest high or the lowest low? It's not really the way Q points are coded. We literally have a way to figure out we look back quite a lot of candles back, so it'll be a lot of them. So let's say that you have, I don't know, 2,000 candles back. We'll probably look for a good portion of that. And then we have an intelligent way to actually figure out which are the relevant highs and relevant lows. So I can't really go into too much detail because it is like intellectual property of my coders, and they will be very unhappy if I just kind of gave you the solution. So, but yeah, it's basically not about how far you look back in a code. It's literally about looking at the entirety of the market and then just determining which one of the highs and lows had all the parameters that you need for what I like to refer to as an established swing. So, for example, let me just find some Q points. I call it the Q points because it's quartile points. So, at one point, I was listening to like earnings report many years ago, and I was kind of noticing that supply and demand had something extra going on, because sometimes the levels will be not quite touching the actual supply and demand zones, but they will be turning around ahead of it. And then I figured out that maybe it's just to do with the overall swing. So I came up with the concept of Q points, where you take the high, you take a relevant low, and you divide it into 4 equal points. And then depending on how the price acts and when it starts to retrace, you get the established swing. So you get the top quartile and the bottom quartile that are now kind of moving in that kind of a range, I guess. And that allows you to come up with kind of a rough direction, speculative direction. And for example, the price is now at a 4-hour Q high on gold, and it's starting to reverse, which is another reason why I think this is a better option for a short today. So if you look at how the market is actually behaving, it's not really about which of the highs and how far back do we go. It's about which one of these kind of pre-swings were like the biggest, the most obvious. And then that means that this low is better than this low because it's got like a bigger swing. It's like a vast simplification of what we do in code. And then you just take that. But as a human, honestly, you should be able to see that without any particular helpers and stuff. Just by looking at the chart, you can kind of see that this low, for me at least, but I have been doing this for a long time, that this low is more relevant, which is why our indicator has picked it as well, because I've given them the spec. So I don't know whether that makes sense to you, but I wouldn't really, people get way too obsessed with, did I get the right low? Why does your indicator do this? At the end of the day, if you see a low, it's because your human eyes have identified that as a relevant low, and it will be relevant. At some point, the way I like to trade, you will not kick off a trade just by the price arriving at a Q high or a Q low. You will be looking for a particular thing to happen intraday and then to take a position. So I'm not going to be shorting this just because it's a 4-hour Q high. I'm shorting it because of the day's narrative, because we have a day where we open below value but inside range. We have a day where the market attempted to accept value and failed, and then went into kind of a sustained auction. So all of that gives me a particular narrative that tells me that this 4-hour Q high is probably valid. So it's a whole, again, Rod calls it situational fluency, and that's exactly what it is. So you have to understand the context. Context is king every time. Okay, Jay Blanco, great point here. I did the Lilu challenge that was for 2 weeks, And so I did not trade my normal calm and cool style. The trailing stop got me. Yeah, exactly. So every time you have these challenges with a trailing stop, you have to approach them entirely differently. Because if you have one good day where the market went 2 grand in your favor, and then the next day you lose a couple and you're 900 down on the day, what are you going to do? Well, your trading drawdown is I'm sorry to say this, but you're fucked. So, don't do that. Trade small and make sure that you're like really careful with the expectation of the challenge and how you approach it. And especially with trading drawdowns like Lilu, you have Apex. I'm pretty sure there's another one that has a trading drawdown as well. You have to approach that in a different way. So, Rod, why don't you chirp in here with how do you guys approach the trading drawdowns?
Yeah, I'm just going to still say the same thing. We just trade so small that it doesn't matter.
Yeah, exactly.
I mean, I'm going to flex for a second, and I didn't need this. I have maybe $4 million in prop money that I have access to. That's notional. The notional is bullshit, right?
Yeah.
So what I really have is whatever the trailing drawdown is on a lot of those. But I actually have now because I have huge buffers in a lot of accounts. So if that's ever an issue, so I don't know. I really don't understand why it's an issue. I just have to tell you, the only reason it's issue is because people are trading too small. Too big. I hear this thing like, so if you set a high watermark, right? What are you letting it happen? Are you letting a trade come all the way back down so you're not aware of what your high watermark is and what your trailing drawdown could be? I
think a lot of people are doing that. Well,
then just go into our trader and look what your high watermark was and where your threshold is. Here's the thing. Everyone knows what they are. People don't like the rules because they feel that they're too constrictive, but actually they are not. If you want to stay in the game long term, I've been trading for 27 years. I recommend these programs because, again, resetting or failing them is still a lot better than losing your own $10, $20, $30, $50,000 running out of trade. So I don't know. I wish I could be more politically correct about it, but they're not a problem. Apex and Lilu got away with it. There's no other rules, gang. There's no other rules. You can trade full contracts. There's no scaling. You can act like a complete moron if you want. The only thing you have to do is just not have a large open winner that comes against you, which is not the case. What happens is people hit an equity high, they close out nicely, they know where they're at, they're close to their goal, and then they just trade like a donkey one day and give it all back and draw it into that drawdown. It has nothing to do with
it comes back to budgeting. It comes back to budgeting and just being aware of. No, you see, one thing that Top Step used to have, they don't have it anymore, but back in the day, like whenever it was 2016 or something, they had this rule that if you have a drawdown on the day from the 50% from your closed equity high mark, you would have to stop trading. And honestly, that was a really good rule because I used to have at that point a lot of the days where I would give quite a bit of profits back. But again, I always had that thing where I would stop at some point. But I've met so many people since then where they just don't stop; they keep going. So that's apparently a very big problem. So maybe have a hard rule that tells you that if you've had a successful trade and you're looking at an X amount of profit for the day, if you draw down 50% of that, just stop, walk away, stop pressing buttons. Like this, you have to be able to control yourself at some point.
Yep, that's definitely one way to do it. So. And again, if you set that at what I suggest, which is 1/3 of the available risk that they give you on a daily basis, but the thing is that the rules have changed a lot of places. That there is no rules at Apex. There's no daily loss at Apex. You can lose as much as you want. You just can't lose. I only do the big accounts, so the 250. You just can't draw down 6,500 from your high watermark. If you can't do that, you shouldn't be trading.
Yeah, absolutely. Yeah, because then you have some addiction problems that need to be talked through with a psychiatrist. Really, not with us too. We can tell you the levels and probabilities, but if you have addiction problems, that's really not. I touch on psychology a lot. I just feel that every time people come to me, actually, it was quite funny on Udemy. I have this Q&A thing that's like a part of Udemy, and one guy was saying how I should touch more upon it. Like the title of the Q&A was drugs and alcohol. And I was like, okay, let's have a read of this. And he literally said, you should emphasize that if you get off the drugs and alcohol, excessive use, that it's going to take you quite a few months or weeks to get clarity. I think you should definitely put that in the course. And I was like, well, I don't really have experience with that, man. Like, yeah, I used to love a drink just like any other person, but as the older I got, the less appealing it got to me. So now I actually drink very rarely. And it's nice, sometimes, but I can't advise people who have had heavy drug and alcohol use how they're going to feel and how many weeks it's going to take them. That's not my domain,
Right. Hey, I have one other suggestion that people might do, and I'm sure EdgeWonk does this, which is the trade journal that Dee uses. I use TradingView, VUE, and I also built some of my I also built some of my own custom analytics. Just quick background: I've been involved with Collective 2 as a partner and investor. Collective 2 is like one of the largest auto trading marketplaces in the world, where we have thousands of trade leaders that publish their walk forward track record. So I've developed a lot of data analytics to look at these things. If you just import your stuff, this is stuff that none of the firms will ask you to do, but you will never ever take a withdrawal from a prop program if you don't have a Sharp over 1.6. You just won't. If you don't know what Sharp is, you should look into it. You could look at your CalMAR. Just import your stuff. If you do that, you're not a good risk-adjusted trader. So no matter what the rules would be, they would always get you. And even if you qualified and passed qualifications, you'd have a very low probability with a Sharp below 1.5 or 1.6, or with a CalMAR below 3 to ever take a withdrawal. That will tell you what
one thing
those
about
are portfolio
Sharp,
management stats.
Yeah, absolutely. But one thing with Sharp that I don't really like particularly, because it penalizes the quick recovery. Now, the way I trade, every time, because I have a positive risk reward, so when I either have like 2 hours or 3 hour trades, depending on what kind of markets we have and how much volatility we have. But effectively, whenever people come to me with like Sharp ratios and stuff, it's like, yes, it's a good measure, but there's another one called K ratio, and I'm pretty sure TradingView has it.
TradingView has the K ratio,
yeah. So I prefer to look at K ratio if I'm deciding whether I'm going to fund someone or not, and it tends to not penalize quick recoveries, because in my eyes, if somebody has a positive risk reward, because you know how the portfolio theory goes. If you get yourself in a drawdown, it should take you like double the amount of time to drag yourself out of a drawdown. But to me, that's like portfolio theory. It's not really intraday trading. Because if you pull yourself together and you start doing the right things, you will drag yourself out of a drawdown pretty quickly with a positive risk reward. So once you start looking at the levels that have a natural risk reward, everything, it kind of balances out really, really quickly. And suddenly you're looking at a positive profit curve. And I always found that Sharp kind of penalizes people who have that ability, whereas K ratio is a lot more like gentle, I suppose, when it comes to intraday traders. That's just my
we could talk more about it, because I don't know what input you're referring to. There's two things that are detrimental to Sharp now. One, the riskless rate of return is nonsense, right? So you have to change that value, because the riskless rate of return has been near zero for so long. But I don't know what you mean by recovery, speed of recovery. That's not an input Sharp ratio. You do get penalized for outside gains, which piss people off. Outside losses.
That's what I meant. That's what I meant.
But that's not. That's what you want. That's helps you in these prop programs. If you have these massive outside gains and massive outside, you're going to have a bad Sharp ratio.
But when people are coming up with their skills, it's okay. Hey, I've got 8 dogs, so I know what it's like. So when you've got when you basically have somebody who's learning, and they get to that moment where they're getting better, because that's one of the measures that I look at whenever I'm working with people, how their whole overall statistics are progressing. And I just found that the Sharp ratio never really catches the turn when their skills start really coming together, whereas K ratio tends to show you things a little bit better. I don't know. That was just like my experience with it. All right, let's move on. So I know you have to run at some point. So somebody's saying, please comment on the cyclical nature of the market. Well, we're intraday traders. So, I mean, cyclical nature, I use it as a, if you mean that the whole economy goes into cycles, that really doesn't interest me much, because I literally sit there and I find my trades intraday and I'm out in anything from 10 minutes up to 45 minutes, maybe a couple of hours if we're having a slower day. But for the most part, I'm really not that interested in the cyclical nature. I think it's overkill for what we do personally. Rod, what do you think?
I love cyclicality. I mean, if we're talking on whatever time frame, right? It's miserable when things just go straight up, which they tend to do, and they have, since the pandemic low, and really with so much positive skew since the financial crisis, when there's been a lot of liquidity pumped into the system. I mean, now we still. Do you guys know that we have $1 trillion in value every 11 days in the Nasdaq? I mean, that's just insane.
Yeah, it's crazy. The volatility. But
at least it's in two directions now. You know, so that's.
See, somebody on Instagram actually asked me, why do I choose crude oil and gold over ES? And that's precisely because in my decade of being a prop trader, S&P has been like really one directional, and not to mention that back in the day it was so slow, painfully slow. We had like days where you only had like 3 handles. That was it. That was your entire day. So for me that wasn't really that great to trade. But even so, it was always kind of going up, like edging upwards, just ever so slowly, and it just annoyed me. But now one of the reasons why I've gone back to trading equities in the last couple of years is because we have ups and downs. So you have opportunities on both sides throughout the session. So that's what you want as an intraday trader. You don't want some one-sided market that just kind of goes and you have to catch it in the middle. That's the worst type of trade that for me, at least. I hate catching things in the middles. I'm best when I'm catching those turns in the market, and I'm good at that because I've done loads of statistical observation, and we've done like 27 different algorithms that all use those statistics. So, that's my comfort zone. And obviously I use the distribution curves as well. But the statistical averages are very, very powerful. Very powerful. Okay, let's see whether we've got some more questions. Ooh, 1R, I'm out, Ricardo says. Okay. That was crude oil, I think, where you were trading. Yeah, okay. So again, crude oil, let me just show my screen here.
Crude oil did come in. It's come in about $1.30 from that 107.50 high. Yeah.
Yeah. And again, that's the statistical averages, again, doing their thing. Yeah. But again, for me, that would be risky in the whole thing. And especially, like, look at the move. Look at the reversal move. It was like over 100 ticks, man. So it's like, great. So unless you for me, unless I caught it somewhere at the beginning of this, I wouldn't really fancy trading it from here, because to me that would mean that I'm getting involved almost like at the bottom of the move, even though it carried on. But in my head, when I'm positioning myself, I see these like little supply and demand areas that get created on very small time frames. So the closer that I can get my entry to any kind of a top or a bottom, depends on whether I'm shorting or longing, that's, to me, that's better. But anytime I need to kind of enter, let's say, like here, that would be for me the middle of the middle. So I just don't really like doing that personally. But yeah, good on you. 1R, why not? That's pretty good. Somebody's saying, I think you should start your own prop firm. Well, we collaborate with lots of prop firms. I actually have a small funding department. It's nothing, you can't really get into it. It's a lot of hoops to jump through. So I don't know, maybe. We'll see. We've got loads of other prop firms. Like, why would you start one? You have so many of them now. It's an entire industry, right? Nate wants to know, is there an opening range time that you wait before entering a trade? Yeah, I wait for the entire initial balance for that first hour of trading to be done before I consider my trades. Rod?
So what we do is so that's time-based, which is fantastic. We use an ATR. So our favorite volatility measure So just really quick background, I always say that trading is just two things. It's high probability entries, finding a strategy that has high probability entries, and then risk management of those entries. Nothing's even close to 100%. And then it's also volatility and volume. So that's why Dee and I are very aligned, because she's using a volume profile as well. Volatility and volume. But I measure volatility by the ATR. So we use a 7-day ATR. So that's a 7-day rolling period of every instrument that we trade. And for us, what we do is we say if the overnight range, literally from the close of the prior day all the way through 5:30 a.m. that morning, an hour before that's Pacific Standard Time, if that 22-hour range was not at least 50% ATR, 50% of one day's ATR. So as an example, the S&P right now is 75 is the 7-day ATR. So the expected average range would be 74 points. If the overnight range was not at half of that, a little over 30, 35, 37, then we also wait until the first half-hour candle, not an hour, which would be a more standard thing. So that's what we do. If we get a nice, juicy overnight range where there was a lot of action already took place, and you'll have that on days where there's 5:30 or 8:30 a.m. news, then we can go in and trade right away, because a lot of volume and a lot of levels have already been displayed over the overnight session.
Interesting. Yeah, you see, so we have similar ways of obtaining trade, but there's differences in the approach. And this is why these live streams are so good, because it shows you different ways of coming up with trading ideas. It's very valuable. Somebody says, not a professional trader. I love that name. So he says, love these streams. I hope you guys keep doing this long enough so I can get more educated and know what to ask. That's a very, very nice statement there. Because that's exactly what it's all about, right? To be knowledgeable enough to ask the right questions so that you can benefit from them. It's absolutely amazing. And thank you guys for watching. Like, thank you for spending time with us, right? So that's it goes both ways. All right. So how's your Nasdaq trade doing, Rod? I think.
Well, I don't know if you can see it. So I closed it right here. I did a little scalperoo, and it didn't go in my favor, and now things are moving higher. So I'm basically done. So I'm done for that trade.
Yeah, it's the average session range again, very powerful. It kind of smashed through it, because it's not like an exact measure. It's not like to the tick. It's a zone. Every level that I talk about, I look at it as a zone. So just because you have average session range at like X price, it doesn't mean that it's going to kind of hit that price and reverse. On some days it does, but a lot of the time it will kind of go a little bit past it and then start the real reversal, so to speak. But yeah, having those on your charts, it's very powerful. I know that Rod, again, uses very similar methodologies. So all of us who have been doing this for long enough, we have observed the same things happening in the markets, and we've just devised different approaches to take advantage of that. But it's all very similar levels. The markets will turn at these levels for whatever reason at particular times of day. And your job as a trader is literally to know how to take advantage of that. That's it.
Yep.
That's all.
Hey, Dee, I'm going to have to.
Yeah, that's fine.
I'm going to have to drop now. I don't know if there's any other. I could take one last quiz question if there's anything anything you gleaned from anything I said, other than yell at you and tell you to trade small.
Yeah. So, okay, Rod, what is your opinion on the harmonic patterns with Renko bars? One last question.
Yeah, so a good question. I have no real opinion on harmonic patterns within the Renko bars. I do have an entire course that's part of my Futures Fanatic course, which you can get for absolutely free. Just go to Traders Dev Group and hit Get Started for free, and you can download the whole 30-video course. It's a complete soup to nuts introduction to that's tradersdevgroup.com, and just hit Get Started for free. And in that, I'll go through a lot of visual price patterns that we've back tested in these Renkos, but they're not harmonics necessarily. But there are a lot of visual price patterns. We call them the stop and go, and a number of others, and they're taught in there. Unfortunately, I recorded that in the summer of 2019, right when the micros first came out, and there was not as much volume there and stuff. So now the NASDAQ micros trade twice the volume, sometimes 3 times the volume as the NQ. So the bars have gotten a little unmanageable looking for actual patterns within the bars. So we've moved away from that a little bit.
Because they happen so quickly.
They happen so quickly that while those patterns are still valid, it's nearly impossible to act on them properly without using market orders, which I detest. So short answer is there are definitely visual price patterns that you can key off of, and they're much more predictable and back testable than the nonsense of candlestick patterns, which have no predictability. I say this all the time because it's so controversial. People want to fight with me. I've been doing it. I've run millions and millions of back tests. Every candlestick is completely random. Now, if it occurs at a level, Dee and I have talked about this. If it occurs at a level, it can be confluence, confirmation, definitely has value in seeing patterns within candlesticks. But saying that a doji is followed by this or a shooting star is followed by this, there's no predictive patterns.
Yeah, the amount of times that I tried to do, like 3 years ago when we were starting with the algorithms, I tried to do shooting star algorithm, like nothing else, just shooting star. It did not work. It failed. No. So textbooks tell you that, oh yeah, this is a reversal pattern. It's a reversal pattern to what? And and then you find that those that have worked had come from an existing supply that had inventory X amount of months or weeks ago. So it's the level. It's not the pattern necessarily. You can have a dozen of patterns, and like Rod says, there is value in them, but it's not the pattern itself. It's the level at which the pattern is occurring that matters.
Yeah, exactly. I'm going to answer these other ones really, really quickly.
Yeah,
Simon saying that day trades, couple setups. Yeah. I'm going to pitch my own book. It's free 30 videos. There'll be 3 or 4 training sessions in there that will give you a starting point. Dee has a lot of good stuff, but my stuff is about trading the edges, staying away from the middle of the muck, similar to what Dee does. So, and they're high probability entries, and that's a good place to start. If you talk about, someone said, yeah, I recommend starting with the MYM if you have no knowledge of futures at all. Dee's going to be trading probably micro crude or full crude and full gold, but her students can trade smaller. Those are great products as well. They'll tend to be a little bit way less squirrely than the stock indices, with the exception of the Dow. So you might want to start with the Dow Jones. It's very manageable there. And yeah, that's it.
Yeah, very good.
All right, I'm gonna drop. I really appreciate everybody.
Yeah, go for it. Yeah.
Yeah.
Thanks for having
me. If you is this being recorded? That's what question I was going to ask.
YouTube records everything.
Oh, it'll be on YouTube. Yeah. All right. Have a great Easter and a good holiday weekend, everybody. Stay small, trade like you mean it, and we'll see you at the next one next Thursday if we keep this up.
Thanks, Rod. I'm going to carry on. Cheers.
Right,
thanks. All right. So, let's carry on talking about some of the other questions. I know that somebody asked ATR versus ADR. So the main thing to remember between those two measures is just that the ATR takes in the gaps, whereas the ADR doesn't. So if you have the week opening up with a gap, your ATR is going to show as the range for the day busted already, and ADR won't. So that's literally the only difference between them. Very, very similar, both of those. Let me share my screen as well. Somebody asked earlier something about Aussie USD versus 6A futures and which one would I trade. I wouldn't trade anything Forex related because the liquidity in Forex is really crap at the moment. And it has been for a long, long time, which is why both Rod and me are trying to move people away from those kinds of, from the entire Forex asset class. It's just really crap. It died a death. When the interest rates went to very, very globally low interest rates, that locked down the momentum, any momentum that you had in Forex. So until that changes, I would just stay away from Forex futures, spot or futures. It doesn't matter. It's still Forex. So definitely not a great asset class at the moment. You can actually, if you haven't seen my video that I posted last time, it says something about why Forex sucks in 2022. So watch that. It tells you all the reasons why that is at the moment. Dave wants to know, do you use the DOM? Do I use the DOM? Do I execute trades on the DOM ladder? Yes. Do I use anything from the DOM to come up with any sort of a discretionary way to go, whether I'm going to like stay in a trade or close a trade? No. So I don't use it that way. And in fact, I think it's a little bit of an overkill. I mean, most times, once I'm in a trade, I don't necessarily sit there and watching it like tick for tick. I will frequently go and walk away and do something else and then come back to it, because at this point in my career, I can do that because I've done these sort of trades at the same time of day, and two things can happen. Either it will work or it won't. There's no third option. So yeah. Jay Blanco says, your Forex video was great. I saw it yesterday because I was waiting for NQ to drop. Today was my day. I caught that right early. Got my Bulldog Puppy Chow money. Very nice, very nice. Yes, we want lots of Treatos for the dogs. Always a good thing. All right, let's have a look. Whether I missed something. Lots of questions. Very good questions today, guys. Right, so Juan wants to know, any difference trading virtual prop firm accounts and real money accounts? At a low level, when you're starting small, there's no difference, right? But when you start to trade with size, people think that it's easier to trade with size. It isn't, because once you go over a certain number of contracts, you start to get problems with execution. So it's not that easy to trade with size. If somebody wants to come in and trade 150 contracts on crude oil, you're going to have a tough time executing all 150 contracts in one go. So what's going to happen is that you're going to try and enter a trade. Now, I usually have a setting that says fill or kill, which means fill the entire position or don't fill it at all. So when you have that, you kind of keep pressing the execution button, keep pressing, and just you can hope that you go in. But I never trade that large. The most that I've traded recently, I traded 180 contracts when I was an active prop trader in the offices and stuff, and doing that and nothing else. These days, because I have my own private account and I have a whole bunch of prop accounts, I kind of trade anywhere from about 4 contracts up to about 40 contracts, and that will be it. So and that I find that's like a pretty good medium size to not have too many problems with execution. So when you're doing there's a lot of criticism with the prop trading companies that some of them have these live sim accounts, and then they basically pay you out on performance on the sim account. But does it really matter? Because when you know that trading live has its own problems, what does it matter? It's actually better for you not to have all of those issues trading a virtual sim account. But having said that, like I said, when you're trading 1 or 2 contracts, it's really not going to matter. So you won't have any differences there. Nate says, if size is the problem, should we only stick to ES? No, not at all, because you would have that problem with anything, really. As soon as you start trading over 100 contracts, it's going to be a problem. But guys, like, who trades with 100 contracts? It would probably be best to break it through like several accounts rather than trade it all on the same account, to be honest. Like you say, if that's our ultimate long-term goal. Well, again, if that's your ultimate long-term goal, then you can have several accounts that won't have that issue, because you're not going to be executing all of them at the same time, presumably, unless you're using like a trade copier or something. But yeah, until you get to that point, that's going to be like many, many years. Simon wants to know, does spot gold / crude / gas suck as bad as Forex? No, not at all. In fact, it's the entire, it's so liquid right now. Crude oil has gone absolutely insane. So at the moment, we have an average daily range of 480 ticks. 480 ticks. That's a lot. Like today, we've had a session range of 500. That's a little bit over that number because of the Russia ban on Russian gas, whatever, or oil. Europe has basically decided to lock down, to not use any of the Russian oil, and that's probably about 5 or 6% the world's reserves, and probably even more so in Europe, which is why crude oil went a bit nuts. So spot gold and futures gold, they are pretty similar, so they will move in very similar ways, but it's just the way they're regulated is very, very different. So you have a centralized exchange, the futures, and then you have this random spot contracts that are generally not that well regulated. So whenever you see a broker offering CFDs, just know that the CFD is managed by the broker themselves. So any volume that you see there is completely irrelevant because it's broker based. It's not actually coming from any sort of a meaningful exchange. So it's all pretty random. But price-wise, you'll see prices that are pretty similar. However, on some days, I will notice that futures are more accurate. Like, for example, they'll be opening just below value, where some of the other the spot markets and CFD brokers, they will show it inside value. And, not being funny, but that changes the entire narrative. One is a responsive activity day where you don't really expect much to happen. And the other one could be, a day where you're opening below value but inside range, which is actually really, really good opportunities on the day. So, yeah, just be careful with that. I always advise people to go to futures. I actually haven't traded Forex actively since 2013. Stephen Barry says, random question, but is there a Traders Anonymous group like Gambling Help? I don't think so. I think some psychiatrists deal with that problem. So he also says, I have a friend who has done that prop trading stuff and have done some serious cash, hoping to find help. What I would say to your friend is that that's probably a question for the psychiatrist, because that's an addiction issue. That's not really an issue with prop trading firms, because, they are what they are. They offer an opportunity to those of us who know what we're doing to scale up capital. But if you're someone who has addiction issues, that's not really something to go to Traders Anonymous. That's something to go to, because traders are generally very disciplined people, those of us who do this for a living. So because of that, I would say your friend needs some professional help, and not from Traders Anonymous, but actual psychiatrist that deals with addiction issues. Yeah, so I know you probably mean well, and people don't really like to be told that they need to see a psychiatrist, but sometimes an intervention is necessary, especially if that habit has started to impact the standard of life. If you just keep pressing reset, I mean, you can lose so much money doing that. Never mind live trading. You can reset like 5 times in a day, 10 times in a day, 20 times in a day. And that's when it's a problem. That means you're not working on your skill. You're just basically randomly pressing buttons. So, yeah. Jay Blanco, you mentioned K ratio, but I could not hear if you said it was in TradingView. No, not TradingView as in VIEW. It's TradingView, VUE. It's a very old, or very old. It's been around for quite a long time. So let me write that. So my A is not working for some reason. Okay, that's interesting. Need a new keyboard. TraderView, I think, is .com. So TraderView, not TradingView. Yeah. But again, if you're looking for journaling software, EdgeWonk is really good. Like I prefer EdgeWonk because it's so amazing. Okay, hold on. Somebody's saying, I came in late. Maybe we talked about this already. The problem I don't like with many of the prop firm is the trailing stop that keeps going up based on your highest profit or trade. It depends who you go to, because some of them have just the trailing drawdown. So we've got Apex. Actually, Apex are running some a pretty amazing Easter deal. I'll tell you about it in a minute. But some of them only trail until you get to zero. So until you get that maximum drawdown up into profit. So for example, if your maximum drawdown is, let's say, 3K, once you've made 3K, it's going to get to zero and then stop. So if your target generally is 9K, 12K, 16K, 20K, whatever it might be, it's not going to trail. So I tend to prefer those kind of programs, but I can definitely see the value of not having a daily loss limit as well, especially if you know what you're doing. So yeah. So, and you say, so it makes you want to scalp. Well, no, you shouldn't be scalping anyways, right? You should be trading small and consistent. So, if you trade small and you're pretty consistent, you will never really get a problem with the trailing drawdown getting you, because you will constantly be pushing or just going a fraction. It's down to you trading too large. That's what it sounds like to me. Again, Rod and I are like so vocal, constantly telling people, trade small, trade small, trade small. The amount of people that come to me and go, yes, I trade 3 or 4 contracts in a prop trading challenge. It's like, no, that's way too large. Like full contracts. Trade micros, be consistent, be patient, take your time with the challenge. So we did talk about this earlier. Don't rush, enjoy the challenge. It is there as a learning opportunity. Okay. So just take it slower, slow down. Trade small and slow down. Two pieces of advice that will help you the most. Okay, so another good question here. How much outside news do you pay attention to when you're trading? Do you keep the news up? Twitter feeds? No, definitely not Twitter feed. I'll do that. I keep Financial Juice up. So it's free. It kind of lags when you have a release. It will lag for about like a couple of seconds. But again, that doesn't really mean anything, because most prop firms will probably want you to have to be flat for at least 4 minutes after the release. So this is pretty useful, but I don't stare at it. It's just that like something like today when they said the Russian news, where is it? Russian news. Here we go. Europe starts drafting a ban on Russian oil imports. Now that is an important piece of news. That it means so much from a fundamental point of view. It means that Europe is effectively losing a vast majority of its crude oil supply. So naturally, what does that do to the price? It kicks the demand up. So that's why we've had a 500 tick day in crude oil. That kind of stuff you have to be aware of. But it's not something that happens every day. And to be honest, on most days, news will not be that relevant in the grand scheme of things. So yeah, I would say I do both. I do watch the charts mainly. I watch my levels. It's all about the levels, distribution curves, statistical averages, time of day when those certain reversals are supposed to happen, or certain events where the market makes a decision. But yeah, so yeah, I wouldn't keep the Twitter feed up. I don't really see any point to that, because there's so many random people, and it's just going to confuse you. It's going to be information overload. Not a great thing to do. Mike D says Jared Tender's book about trading is awesome, about trading psychology. Okay, that's a good book, I guess, to read. However, if you have trading addictions, like somebody's friend, that's probably not going to help them, because I think they have some deeper issues that have nothing to do with trading, really. It's probably that they have an addictive personality to begin with, and they've just replaced whatever addiction they had previously with trading. So obviously a huge problem. Nate wants to know, if you could tell your beginner self one thing, what would you say to help them at the start of this journey? I had a pretty good start. I lived in Canary Wharf when I was starting to trade, so I kind of rubbed shoulders with a lot of traders who actually did prop trading, and they worked for banks. So I kind of had best of both worlds. So I didn't really lose much time with random retail trading strategies, and immediately I noticed that they weren't really the way to go. It was way too discretionary. I don't like anything that's like wishy-washy. If I can't explain to myself why I'm in a trade, I'm very uncomfortable with that. But I would say that I made one mistake, which was to start using just my trading income as my sole income. That I rushed, because I started making a lot of money, And I thought like, oh, that was it. And then I made a mistake of being so stressed out. My eyes were bloodshot. I wasn't sleeping because my next mortgage was dependent on whether or not I had profits. So don't do that. Make sure that you're in a very, very comfortable position if you're going to do that. But even so, I would say have multiple streams of income on the go. Some of the reasons why all of us who do this job frequently have training and consulting. I actually have a software development company. I also have a small IT recruitment department. Then we have some of our funded traders. So all of that is like different sources of income. I would always say that it's much easier to get wealthy if you have multiple streams of income on the go. So one thing I would say to myself, don't limit yourself to one stream of income, whatever it was. Trading, not trading, it doesn't matter. So one job, or just trading for a living, or just having one company. Always have long-term investments. I even have some money staking cryptos as well, even though I don't really like the crypto space because I think it's very unregulated. But still. Coyote says, what do you think about indices? I like indices. Rod is an indices trader and bonds trader. I'm a lot more comfortable with commodities. But I have gone back to trading indices when the whole coronavirus kicked off because the liquidity came back. So because of that, let me just close some stuff up. Yeah, so because of that, I did start trading them again, and it's been pretty cool. But I normally trade them very late in the day when I see the opportunity come up. So it's not going to be like an everyday thing. I'm still very much a commodities trader. So because of that, I would say equities are good at certain times of the year, but they're not my favorite. And it's completely a personal preference, right? Totally personal preference. Okay, let's see. Warren Mike says, I have issues taking my profits early instead of letting the trade play its way out. So my question to you is, what are you using to get out of a trade? Is it like a set target, like 2R, which is statistically completely viable? Or is it just like, oh, I'm just randomly trading? Because honestly, I only use 2 or 3R depending on how much space I've got and the size of the stop loss that I use and things like that to take my profits. And honestly, I really don't care how much further the market goes past my target. Everyone is so super obsessed with, hey, how do I how do I get more money? And honestly, that's not important. What's important is that you're consistent enough. If you're profitable, don't worry yourself with how much money you left on the table, because on any given day, the market might move 100 ticks, it might move 500, it might move 50 ticks. It's an unknown. So you don't know that. It's kind of like going kayaking and not really knowing what the weather will be like. You can't control the weather. And just like you can't control the weather, you can't control the amount of the move that you're going to get whilst you're in a trade. So if you're having consistency, please don't worry yourself over the fact that you're not making all of the money, that you're not squeezing every last tick out of the market. Having said that, I do use some of my statistical averages if you really want to hone in on how do you tighten up the rules over your profit targets. Take a look at the statistical averages and or value areas. Value area is a distribution curve from yesterday's business. So it ties up very nicely into distribution theory and auction theory and all of that good stuff. And it's not based on wishful thinking or crystal balls or anything like that. It's an actual level that institutions also use to make their decisions, which is why those levels work. It's also why both Rod and me use those levels, even though we've only met each other very recently. And, we're two different people. We have different approaches, that's for sure, but we have very similar levels. And why? It's because that's how the markets work. That's as far as they go. It's a statistical average. So once you start seeing those, maybe try using the statistical averages for your targets. See how that works. But honestly, if you're profitable, don't worry about it. It's fine. Okay. Ricardo, I'm not gonna lie, I did 2 positions for step 1. I got out of it quick, not at step 2, and now at step 2, and I'm taking my time. Okay, yeah, so you've realized your mistakes, you've slowed down now, that you probably have a weekly loss limit in top step, step 2. That's a mouthful. Top step 2. So yeah, just take your time, trade small as much as you can. I know that with Top Step you can't do micro crude and micro gold, but you can do micro indices. So that's definitely the way forward. Ocean Blue says, do you have experience with this? In reality, can a retail trader expect to be able to create a highly profitable trading bot? I don't think so. Unless you have a whole team of people with you, no. You can create a simple bot, but whether it's going to be highly profitable throughout the year, that's very unrealistic, because with hedge funds and firms that run algorithms in general, they have a job that's called the quant strategist, and because we license a couple of our algorithms to different firms, so effectively when that happens, your algorithm is not going to be run throughout the entire year. There will be a guy who's going to take his experience and knowledge about the markets and analysis of the markets to determine which types of algorithms are most appropriate for that time of the year, that market condition that we have, etc., etc. So a whole bunch of stuff. So if you're a retail trader and you want to create any kind of a trading algorithm, you might be able to create one based on like stock trading and long-term positions, but intraday you really have to have different people who specialize in a whole bunch of stuff, and then you also have to have knowledge to switch off the algorithm at the times of the year when the strategy is not appropriate. Jay Blanco says, Mandy Poor is a great trader psychologist. She has a lot of free videos. Yeah, there's a lot of free stuff out there. There's a lot of amazing resources with trading psychology. But again, the guy that posted the thing about his friend having an addiction problem, I don't think that's a trading psychology problem. I think that's an addiction problem in general. So yeah, the trading psychology is not going to help them. Okay, so Coyote wants to know, please furnish me with a list of prop firms that do not have daily loss limit as an objective. Okay, so let's talk about that, because actually Apex, like Mike D said, Apex has an amazing Easter deal coming up. So let's put it down. There's a couple of codes that you can use. I mentioned it on Instagram today, so I'm going to mention it again. So on Friday, Good Friday, for one day only, Apex has, so Apex is one of them. They don't have a daily loss limit, but they have a continuous trading drawdown. So you have to trade small, okay? So make sure you understand that part. Trade small, in case I haven't mentioned it yet. So Apex Good Friday deal, they're doing a deal for 80% off on that one day on all accounts, but it's only for the first month. So really, if you're someone who's pretty confident in their abilities, you can actually sign up to that and get the 80% off. Let me see if I have a code for you, because I know Rod has some codes. So let's have a look. Let's have a look. 1 minute. Yeah, so 80% off. So Apex Trader Funding. The code for the 80% off for the first month is stake me 80. Okay. There's a second deal. If you're not confident that you can pass in one month, there's another deal that's running until the end of April. And that's 50% off on all accounts, lifetime. So ongoing subscription. So for as long as you're with them, you will have that price. And that price is, that code is stake me now. So very, very good deal. So that one runs until the end of April, okay? And that's for Apex. Now, I haven't done Apex. I know that Rod has got quite a lot of people with them, and there's no problems with withdrawals. They're actually, a legit prop trading company. They don't have the daily stop loss, daily loss limit, however you want to call it, but there is a trading drawdown. So you cannot have massive days and then the next day you lose it all, because you're going to blow the challenge, okay? Not a professional trader says, so you're saying don't quit your day job. Yes, that's exactly what I'm saying. Warren says, okay, this is a very good one. I use the 1 ATR for my stops and set the profit target 1.5 ATR. Okay, I've got a question for you. So 1 ATR, what sort of time frame do you use for that? Is it a 24-hour time frame? Because if that's what you're doing, that's actually a really large stop loss. That means you'll be using like 200 ticks on one day, and then you don't have space intraday. What we do with market stalkers, we actually take whether you use ATR, ASR, or ADR, it doesn't matter. It's like all very similar. So basically, I will use ADR divided by 4 or 5, sometimes even 6 and 7, and that would be the size of your stop. And why? It's because your stop loss is 1 hour, right? And then you're leaving the space in that average range to have the space for 2 or 3 hour move without sacrificing anything else. So you're staying within that statistical range. But if you're using like 1 ATR and you're setting it only for the last couple of hours or so rather than the entire 24 hours, then that's definitely a good approach as well. Jay Blanco, strategy question. If you're funded in Top Step for the 50K account, target 3K, when you have a solid strategy that you are consistent with, do you then go for the bigger account or do 2 prop firms? Well, with Top Step, I don't think they scale you up, but Earn to Trade, you can always go to other prop trading companies. No one can stop you these days from having 10 accounts. Like, for example, Apex, you can buy 10 accounts, 15 accounts, like as many accounts as you want. You have multiple accounts with them with a single login. So that's something to consider as well. But for example, if you start small with Earn to Trade, so let's say that you've done well in Top Step and now you have a good strategy, you want to scale up. Well, obviously, you can go to Earn to Trade, you can go to Lilu, you can go to other people. For example, Rod has 3 million in funding. Like, that's a lot, and he's got accounts with all of them, like literally all of the companies. I'm only with 4 at the moment, but again, I haven't traded my Top Step account for a long time, and I'm probably after a while they just close it, so I'm probably going to lose it. But yeah, so 3 other accounts I've got remaining, and it's just one of those things. It's like, if you're consistent, of course you want to scale up, so go to as many prop firms as you possibly can. Get that capital. That's what it's there for. Ocean Blue says, Dee, can you speak to how your system works the entire year as opposed to what you were saying about a bot and having to shut it off? Well, my system is not really a system because it's not like A to B, like, 1 plus 2 equals 3 sort of thing. It's all to do with the narrative on the day. And because we're manual traders, I have an ability to switch strategies depending on what the narrative tells me, right? So, for example, the narrative in crude oil today told me that we opened inside day, but then we kind of broke out of that, and subsequently it went into a sustained auction after that. So that you can see, you can definitely see it on the profile. As soon as it started leaving single prints behind, you should have known something's up. Single prints left on the profile, like you see here, it means a very, very strong auction. Okay? Very strong auction. So you shouldn't really go against it unless it's the end of the day. And sure enough, it overshot ADR by about 100 ticks or something. And then it kind of went into a little bit of a retracement. But for me, this was too much risk considering the narrative in which this move happened, which was Europe losing Russian crude oil or having a ban on crude oil. So Warren says he usually trades the tick chart, so 1,500, 4,000 tick chart in the IQ futures. Okay, yeah, that's fair enough, no problem. Again, there's a million ways to do it, but just as long as you kind of understand that if you use the entire ATR or something, depending on the time, obviously you use a tick chart, so it's going to be based on ticks rather than on a time period. But usually ATR and ADR take in a number of hours, typically 24-hour periods. In my program, the Pro Development Program on the e-learning portal that we have, I use the average session range, which I was showing at the beginning of this stream. if you can, Ricardo says, if you can afford it, do 150K for top step. I mean, Earn to Trade also have 150K, and it's a one-step assessment. And it says if you're doing Marcus Stalkers or Rod's Trader Dev Group. Yeah, exactly. So the larger accounts are obviously better. If you're like, if you do have, $375 to spare per month, it's always better to go for a larger one because it gives you a lot more leeway. You have a lot more space to maybe make mistakes, especially if you've not done this for many years already. So you will make mistakes. Mistakes are an important part of the process. Otherwise, you won't really learn. So personally, whenever I do a prop trading challenge, I tend to go for the highest one that they offer. Because it just gives me a choice, and I'm pretty confident that I can reach targets. So again, it's down to your skills quite a lot of the time. And the longer you do this in a systematic framework, the more confidence you will have, and the shorter it will take you to actually get to profits. That's why Rod can do micros and still make 12K on Lilu. So it's skills. It's definitely skills. So Ocean Blue, to finish off with your question, it's not a system, it's a methodology. So when you have the skills to have a look in the narrative within the market context, it gives you a lot of power. So the rest of it is just controlling yourself and knowing when to stay out of the market. Because not being in the market, that's also a position. So never underestimate that. Yep, my Windows is informing me that it might restart. Okay, so if you guys have any more questions, let's take them. Otherwise, I'm going to finish off this live stream in about 5 minutes. Very good questions, very intelligent questions. So, new messages, let's see. Ocean Blue says, D, your courses are very good, excellent. In fact, oh, thank you. Packed with valuable facts and experience. To be honest, I've never seen such a solid, robust training course like this. Oh, thank you. That's such a nice thing to say. I'm very, very glad that you are getting so much value out of it, because that was my dream. One of the reasons why people in the industry initially, when I first started doing the courses, they didn't like me because I effectively put all of it out there for the regular people to find out about the profile and auction theory. I had some guy who was he was on my Go course, and he said, when I first started following you on YouTube, there was nothing. There was Jim Dalton and there was you. There's nothing else on market profile. And then he didn't really like the fact that Dalton never really explained where he puts his stop losses or how he approaches his risk. So he decided to go to me. So yeah, but I really tried my best to put all of my experience and knowledge into the pro development course. I know there's a lot of information in there. This is why we have the drip feed system that on most things, like Silver Plus, I think has like a faster drip feed, but then the rest of them all have a slightly kind of drawn out time period between the relevant lectures. So sometimes you have to wait for a week before the next lecture is opened up, because I want you to use and observe that concept in real time. Since I've done that, we've had so many good results with people. It's totally insane, and it's amazing, absolutely amazing. Simon Graham says, currently in your silver course, but we'll get a gold professional development program this year. Okay, looking forward to talking to you, because you have to talk to me first. But no, I promise I'm very nice. We have a conversation. I ask you a whole bunch of questions about your approach and where things might be not quite working as they should be, and then I come up with a roadmap to work directly with you. So I always approach every single individual trader that comes to me. I always approach them with a blank slate, and I take in the information that they give me, and then I get a very, very good idea of where the problem is. So yeah. Oh, by the way, guys, we're also running an Easter sale on the main website, on marketstalkers.thinkific.com, which is our e-learning platform. So check it out. It's 40% off on everything apart from gold, because gold is more like a consulting service, and it's already, we're already running pretty tight profit margins there. So check it out. It's a very, very good deal. In fact, Easter has got a lot of good deals around. So check out Apex, check out Market Stalkers. and save some money is definitely the way to go. We're always trying to save money for people because that's what it's all about. It's like any other business, you know. You don't want to pay the full price. Everybody loves a deal, don't they? All right, guys, thank you so much for joining me for this live stream. I'm going to drag Rod onto another live stream next week because I think everybody's getting so much value out of both of us pitching in with or chipping in with our different approaches, but also similar approaches. So you can kind of see how two professional traders come up with a narrative and how they actually come up with their levels and how they explain it to themselves, really, so that we can explain to you. And I think we're going to keep going with that. But hopefully next week I'll be well enough to do my usual live stream, which is earlier. It's usually around it's 3:30 p.m. GMT, but that's I think it's 10:30 ET, if I'm not mistaken. If I'm not mistaken. So yeah, so 10:30 ET, 3:30 p.m. GMT. I usually do my own kind of little breakdown of the setups that we might be having and the narrative, and I show you how I come up with my own little daily market prep that I have, which is somewhere here. I have like the prep template, which is very high tech, as you can see, but it just helps you from doing those impulsive trading moments and stuff. When you write it down, it just kind of almost keeps your thought process streamlined. I also do something similar in Rod's room on Wednesdays at 11 a.m. ET. So do feel free to join us over there as well, because we always talk about different stuff. But yeah, it's been fun. So guys, I'm gonna say happy Easter, enjoy your weekend, and I will see you guys next time.